In commodities, we have a lot of corporate clients. Corporate clients like airlines, oil and gas producers, utilities, freight companies. And so we get to touch a lot of companies every day that are out there in the real world and providing services to people in their everyday lives. Our main business is risk intermediation, and really we find ourselves intermediating three different types of risks: price risk, credit risk, and funding risk. If we start with price risk, which is the most basic, the way that commodity price risk affects companies can sometimes be on a first-order nature, like an oil and gas producer, that obviously cash flows in their business will be very highly influenced by the price of the underlying product they make. But then there's also secondary influences on something like a freight company, where a freight company is in the business of moving things around the world, but the number one cost for most freight companies is fuel. In the case of an airline, because it knows how many tickets it's going to sell fairly well in advance, the next part of the equation for them is managing their costs in the same controlled way. And for an airline, fuel would be a big part of that. And so thinking about how to manage the price risk in fuel relative to the rates they want to charge clients is a service that we can help them with. One of the trends we've seen since the financial crisis has been corporations and banks trying to find greater efficiencies in their balance sheet. And in the commodity business, corporations often be required to carry a lot of inventory. And carrying inventory can be expensive. You take a refinery, for instance, it has to carry input inventory, crude oil, at the beginning of its process, and it carries product inventory like gasoline at the end of its process. But a refinery wants to primarily be in the business of making refined products. It doesn't want to be in the business of financing refined products. That's where we come in. We take the inventory that they have on their balance sheet, we give them cash, and the cash they can use to improve the refinery or grow their business in other organic ways. So it's interesting to the extent that commodities are part of the supply chain, and price risk is evident everywhere in commodities, and it touches a lot of places you would never expect. And the trends that we see in structured finance today feel like they're going to be in place for a while. There are hundreds of billions of dollars of commodities that are in transit every day that need to be financed. So what we want to do is help clients find solutions on how to finance those commodities on their balance sheet.